Hi there. Thanks for joining me today. My name is Suzanne, and over the last 10 plus years, I've been working with and continue to work with many educators who teach investing skills and strategies. And I've met all sorts of personalities and characters in that time. And what I've learned is how to pull out some nuggets of wisdom and get to the core of what they teach. So today I'm going to be talking with AJ Brown, the president and founder of Trading Trainer, and I'm going to ask him a question and let's see if I can pull out some great advice for our viewers. Hi, AJ. Welcome back.
Hey, Suzanne. I'm doing well, thank you, and glad for having me back. Thank you.
Wonderful. Thanks. Well, before we get into the question, I just want to say you have some fantastic things going on at Trading Trainer. And one of the things that I've found particularly valuable is your collection of white papers where you cover everything from scenario testing to diagonal spreads. Can you tell our listeners a little bit about those papers and how they can get their hands on them?
Yes, of course, I've nerded out over the years and put together these white papers that get put into public domain, which means they're free for everybody. And we have those white papers for you to access right on our website. The easiest way to do that, I'm going to share my screen here, is visit our website. So we've got a nice secure website here at tradingtrainer.com, TradingTrainer.com. And when you come to this home page, what you'll notice is some images scrolling by. We call this our carousel of images. And the one that I want you to jump to is this one that says white papers. Download the white papers now. Click on that big green button and it'll take you to a short set of steps on how to get yourself a free account at our web portal. Do that because the white papers are contained behind our web portal login. And in addition, we have all sorts of bonuses that we're throwing in. Maybe I might have some sort of screening tool that I want to beta test with some users. And if you're part of that web portal, even with a complimentary account, I'll be calling on you. So there's all kinds of bonuses in there, some audios, webinars that I've done for the public that you may want to check out, but especially those white papers. So go check it out. Get yourself that free account.
Yeah, I can attest to it being worth your while getting a free account. I've had it for a while, and there's a lot of good stuff in there. So yeah, go to Trading Trainer and check that out. Well, thank you. Now it is time to pick your brain a little bit, and we'll get into the question. So the question for you today is, how can you profit from an option? Is it just as simple as a leveraged stock, or are there other ways to profit?
Oh, that's a really good question. So, a lot of people come to investing in options, trading options from trading the underlying symbols, whether it be a stock or an ETF or an index. So they come from what I call a directional move, where they know about the price of the underlying symbol going up and down. And what attracts them oftentimes to options is the fact that they can be leveraged. In other words, an option goes up in value with its underlying symbol. That's a call option specifically. And there's even another variety of options called the put options, which work inversely. So in other words, if the underlying symbol goes up in price, the put option goes down. But if the underlying symbol is tanking, then the put option goes up in value. So a lot of folks come from it as a stock substitute, because you can profit from the same direct or even inverse price action, and there can be an agreement between the underlying symbol and the option for every sort of dollar movement that the underlying symbol moves, the option will move a commensurate amount. So a lot of folks come from that directional perspective, and that's definitely a way you can profit from options, is through the underlying symbol movement. But there's so many other ways as well, because options are very interesting instruments that are influenced by many other variables, including how much time is left on the option's lifespan, and also the buying and selling pressures of the option itself. The option, just like the stock, if it has a lot of demand, you'll see that its price goes up and down. I'm going to show you a quick teaching aid. I don't want to take too much time, but this
No,
is
that's great. Visuals are always helpful.
right. So here you can see that I've got an option price mapped out. The option price is represented by this green line. And you'll notice that there's also a blue line. This is a $50 call option, and you'll notice right at the $50, we call that the at the money point, the blue line starts going up dollar for dollar. And so, for instance, at $51, the option's worth $1. And at $55, the option's worth $5. The blue line, that is. The green line has a different value to it. And so you'll notice that the green line also wears out as we get farther at the money in either direction, farther from being at the money. But this is where you get that directional component. So you'll often hear people say, well, I trade in the money options directionally. And that's because you almost get this linear price action with the underlying symbol movement. That's the call. This is what the put looks like. So kind of the same thing, but in the opposite direction. But what I like to think about is that green line. If you separate this little area between the intrinsic value and the option price out, you get something called the extrinsic value. And this really neat extrinsic value is influenced, like I said, by time passing by. As time passes by, that extrinsic value decreases, as you can see here. And then also, again, the demand on the option itself influences that extrinsic value. Here you can see where there's little demand, the price goes down. Normal demand, high demand, the price of it goes up. So that means we can profit on the options, whether we're buyers or sellers, on the underlying symbol price action, whether it's going up or down. But if it's going sideways, we can profit on time passing by, or we can profit on the buying and selling pressures for the options, which, interestingly enough, why would somebody want to buy or sell an option? The main use of an option is hedging. That means protecting oneself against sporadic moves in the market. And so if you think about it, when the buying pressure of an option goes up, that means there's a lot of demand for hedging or protecting or insuring your positions. So it's almost an indicator of if people are fearful that the market is about to go squirrely. And the opposite is true. If the price of the options start going down, if there's not much demand for them, people are very secure and confident in the direction of the market. And so we call that implied volatility. And you can even profit on people's perception of what the market's going to do next. In fact, when you think about the underlying symbol, there's really only two mechanisms to profit on the underlying symbol, whether the underlying symbol goes up in price or down. But when you start to factor in all the different combinations and permutations of how to make options profit with time passing by, with changes in implied volatility, with the underlying symbol direction, even changes in the risk-free interest rate set by the Federal Reserves and the different central banks, well, you wind up, I think the last count was 27 different ways to profit from options. So definitely worth researching them and realizing that options open up the flexibility to profit in all different ways from underlying symbol action and patterns.
Great, great overview. Thank you so much. And thanks for pulling up those visual aids. That really is helpful. I know that'll help our viewers. Well, thanks again. You're always insightful, AJ. Thanks for being here. And before we wrap up, I just want to have you go to Trading Trainer one more time and run down how our viewers can get their hands on the white papers.
Absolutely. Take a look here, folks. If you go to tradingtrainer.com, just type that into your browser, TradingTrainer.com. You'll come to our website, our homepage right here. And at the top, we have these images that just scroll by. And the one that you want to look for, of course, is the one that says, grab the white papers, download the white papers now. And when you click on that button, you get a nice explanation of how to get free access to our web portal. Do that now. I want you to do that now because not only will you get access to our white papers, but you'll get access to all the bonuses that I put into that web portal. It's chocked full of all sort of exciting tools and resources for you. So go do that now.
Wonderful. Thanks as always for being here, AJ. And the next time we talk, I'll be asking you what's the difference between paper trading and simulator trading. So get prepared for that.
Very good. Thank you.
Thank you.